Where do you think we are right now in the cycle of this particular downturn?
Yeah, I think we've continued the trend since we last spoke in March, which is that, private valuations tend to lag a little bit behind public ones. And we're just kind of starting to see that reality set in through Q2, as observed through some of the CB Insights data. Something that we've seen on our side is that maybe if companies were trading on the EquityZen platform in secondaries at maybe a 20 to 30% discount in Q1 to their most recent funding round, we're seeing that to continue to go downwards towards maybe the 40 to 60% drop, which again is kind of reflective of what we're seeing in the public markets. So I think we may be reaching the bottom here, but we've certainly kind of continued the slide over the past few months.
Some venture capitalists are recommending not just 1 to 2 years of runway, but 3 to 4 years of runway. I mean, can startups really handle that when their businesses are already getting a hit?
Yeah, it's an easy thing for a bunch of venture capitalists to say. I think it's no company was really prepared to have 3 to 4 years of cash as a startup, the same way that no company back in COVID was really prepared for an environment with zero revenue for a period of time. So I think that's a bit unrealistic. I think what you will see is kind of a definite shift in attitude on how companies are spending money in particular. One of the things they can control, as already kind of observed by some pretty significant headcount reductions. We've seen that compensation really is the majority of spend for most of these technology companies. So we'll expect to see that continue.
So let's talk to us about these folks who are getting laid off. A lot of people don't understand that employees who work at startups, half of the upside is the equity in those startups, but you have to buy that equity in order to benefit from that upside, often before you know if the startup's going to be a success or not. So when you get laid off from a company, you have a very short window oftentimes in order to buy that equity. Can you explain to us what these laid off employees are going through right now?
Yeah, absolutely. It's a tough time. It starts off by getting laid off, which is obviously a big hit to someone's financial future. It's compounded by the fact that most of these employees, as you mentioned, are issued stock options, which basically give them the right to purchase shares of the company they work for. And that's usually a really big hook and an incentive for these employees to have joined the companies. Unfortunately, most of the rules around this say that you have 90 days to basically buy those shares after you've left the company, or even if you're terminated. So you can kind of imagine this really unfortunate scenario where hundreds or thousands of employees are getting laid off and are then given a really short window to decide if they should pay money out of pocket and incur a tax bill to own their stock or not, right? It's really uncertain to know if your company is going to be successful at this point, whereas maybe 9 or 12 months ago, it felt like a complete no-brainer. And so we're starting to see some more and more active conversations between companies and between secondary platforms like EquityZen, and also between companies and their employees to see if they can kind of help solve this problem, which is obviously a pretty meaningful one.
Then you have a company like Bolt, the high-flying e-commerce startup that actually gave employees an option to buy their shares early. I wonder if those employees are now in a horrible or very precarious financial situation because they took that bet and now it's not panning out, at least not now.
They absolutely are. And actually, when that proposal came out from Bolt Financial, whatever it was, maybe 4 or 5 months ago, a lot of the venture capitalists, particularly ones that had gone through the dot-com crash in 2000, waved as many red flags as they possibly could to say, this can end very poorly when markets kind of turn on their head. And so while it is one idea to kind of help employees with owning their stock, we can kind of think of many other solutions that I think are a little bit more palatable for companies to enact for their employees. I would say kind of the two easiest ones to do are that companies can proactively kind of convert the equity compensation they give to employees at departure to actually extend that amount of time where they have to exercise to own their shares. That's something we saw from Pinterest and we saw from Coinbase many years ago while they were private, and I think it was very well received. And something that we work on with companies is that we can help companies elect to allow employees, to sell some of their shares, through secondary transactions or private transactions to help, cover the cost of any exercise or any tax implications as well. The last one I think that we'll see that we talked about a bit before was that companies can actually redo kind of their fair market valuation, which is what's used to determine tax implications and also the price at which you get your stock options. And we saw companies like Instacart do that, and I expect and hope to see many more do that as well.
So what's your advice to employees right now? Say they've just gotten laid off. They don't know what to do. Should they buy the stock or not? How do they evaluate this decision?
Yeah, it's a tough one. My first advice would be to kind of ask the company what choices they do have with their equity. Is it really just 90 days? The second thing I would ask is if the company is aware of investors that maybe are already on the company's cap table that are looking to grow their position that can help with liquidity. I think that's absolutely the first one. And then the last one, which is obviously a little self-serving, is to kind of explore what options you have within the secondary markets to get liquidity for your shares. As you know, while the markets have taken a turn, we have seen a lot of investor interest, particularly at these lower prices for companies that they've wanted to invest in for years that they finally feel like are more fairly valued. So I encourage employees to kind of start having those conversations as soon as possible.